This is the WealthNet Market Call of the Week, highlighting investment trends that could affect your wealth. Globally aware with a geopolitical and quantitative perspective.
Hi, this is Louis Yanis with WealthNet Investments, and this is the Market Call of the Week. I want to talk a little bit about asset allocation today because asset allocation, a lot of people really want to focus in on when they talk about generating a stable return, generating a return that has more muted of the highs and lows, and really try to get a more stable outcome. And there's a lot of myth with regard to asset allocation. I was talking to a good friend of mine who is a long-term investor that's been professionally investing for clients for over 20 years. We actually used to sit next to each other when we were, training when we were really young, and he's done very, very well for his clients. And we were talking about how when you retire has a lot to do with how well you're going to do and how you should invest, and how, just imagine if you were to retire right at the peak of the dot-com bubble when the market went nowhere for over 10 years, what your situation would look like in that scenario versus if you had actually retired right at the low after the 1987 crash and you had nothing but straight up for a very long period of time. And so we started thinking about and talking about how averages can be very, very deceiving, because an average, by definition, it's kind of the middle. It doesn't show the extremes. And in the real world, we live with the extremes, and we have to deal with that. So today I want to talk a little bit about being on the conservative side of your asset allocation. And this is something that we've been doing with client portfolios, because when we look at the overall markets, it's not the end of the world, but we see high valuations. We see some risks with tariffs. We see risks with regard to the fact that the business cycle has been going for so long. And we just want to focus in on value and look for companies that are more stable, like a Dunkin' Brands, companies that really have the ability and capability of maybe earning a good rate of return on their investment, even if the economy gets bad. So that, combined with just being more diversified, maybe having more T-bills, more cash, more shorter term bonds. There's just a lot of different things going on. The Fed is raising rates. And really, I think that for most investors right now, being on the conservative side of your asset allocation is really a good idea. When I look at the household equity ownership, and that's one of the things that is tracked by a lot of the economists. Household equity ownership, that's basically if you take everybody in the United States and say, how much stock do they own? That is actually at a pretty high level right now. And what's amazing about it is if you look at it statistically, that is a great indicator to tell you how the returns are going to be in the future. And it's kind of inverse. When everybody owns stocks, then the market returns are generally a little bit more muted. And when nobody owns stocks, the market returns are really, really strong. When I look at the market today, and when I sit down with clients and we talk about things, what I'm seeing is that most people are really pushing the edge of the envelope, and they're on the aggressive side of their asset allocation. And given all the things that are out there that I've kind of outlined in a very general way, that doesn't really make a lot of sense. So I think what's going to happen over time is people will start being more normal in their asset allocation, and that could lead to a little bit more muted returns. So I think the best thing to do is to think of this as kind of a trim and trail environment, which basically means you trim back some of those investments that have been doing very, very well, that are potentially overvalued, and then you hold on to them. Don't get out of the market. Focus in on those investments that have good quality values and technical conditions, and diversify, and even maybe have some metals like palladium and platinum and gold, and really just being more broad. That's really my message for today. If you have your portfolio in a way that you think may be overly aggressive, maybe now's the time to kind of think about readjusting your portfolio. Let us know. We actually have a portfolio review system where we can go through and give you a second opinion, like what is going on with your portfolio, what are your fees, what is your asset allocation, what does the risk look like under various scenarios if we have a good economy, bad economy. It's a good time to take a look at that right now, especially since we've been in a bull market for a long time, since the financial crisis, 2008, 2009. All right, well, that's all I have for now. Just a quick one. Happy investing and trading. This is Louis Yanis with WealthNet Investments, getting ready to sign off. And by the way, if you don't have the market calls coming to your inbox, be sure to go to wealthnetinvest.com/market call and sign up. And then that will give you, you'll make sure that you get these market calls every week that we send them out, okay? And follow us on Twitter as well as at Louis Llanes. Happy trading and investing. Louis Llanes signing off for now. Have a great day.
If you like this information, be sure to subscribe and follow us on Twitter and Facebook. The market calls are designed for informational purposes and should not be considered investment advice. As always, do your homework, assess the risk, and invest in light of your personal goals.